Italy's Prime Minister Mario Draghi is due to face lawmakers today and tell them whether or not he will stay on as Prime Minister. This is likely to create significant market volatility in Europe, just ahead of a crucial meeting of the European Central Bank tomorrow. Last week, when one of the coalition parties decided to oppose a bill in Parliament, this move led Draghi, who has been in power since February 2021, to announce he was quitting. However, Italy's President Sergio Mattarella rejected Draghi's resignation and asked him to conduct further parliamentary negotiations. And a campaign begging him to stay has swept the country, something that's unusual for Italian politics. Over 1,500 mayors from across the political spectrum, along with various labour unions, have declared their support. For more on this now, let's go to Victoria Scholar, who's head of investment at International Investors. Victoria, how likely is Italy at this point to face a deep recession? Because, I mean, all this is coupled with a potential gas shutdown from Russia. We'll have to see what happens on Friday, and an energy crisis that's more worrying in Italy and Germany as well than it is for other European countries.
Hey there. Yeah, well, I mean, we've already been hearing from Draghi this morning. He's been talking about reducing Italy's dependence on Russian gas over the next 18 months, among other headlines, as he addresses the Senate. But clearly, this political instability is adding to Italy's growth outlook worries right now. It's already concerned about a slowdown. We've seen the European Commission downgrade its growth forecast for the Eurozone, and we've seen the risk of a recession in Italy sharply rising, and that's partly been reflected in the price of the euro as well, that's been slumping to a 20-year low amid that uncertainty in the Eurozone. Now, all eyes are on the ECB very much this week. It's expected to increase interest rates. That in turn will add to the economic strain by making borrowing more expensive. But we're seeing a lot of this reflected in Italy's equity market as well, hitting lows not seen since 2020. And we've been seeing bond yields rise sharply, those spreads between Italian and German bonds widening.
Exactly, Victoria. You said it's been reflected in the euro, but also in bond yields. And on this last point, it's interesting because the EU is actually set to announce today the anti-fragmentation tool that's to keep Eurozone bond spreads from essentially widening too much. And how important is this for countries such as Italy, also such as Greece, the most heavily indebted economies?
Yeah, I mean, it's very important. It is, like you say, to stop these bond spreads from widening too much, yields on some of the peripheral countries like Italy and Greece from becoming too high, and to stop any kind of, or too much, should I say, volatility within financial markets, because essentially we need that bond spreads and bond yields to remain relatively under control in order for monetary policy to be effective, because the ECB is pledging to buy more bonds from some of the more debt-laden countries like Italy in order to contain those spreads. And look, it comes at a time when spreads are very much widening. We've seen the Italy and German 10-year spread widen to the widest in a month. So let's wait and see if that tool does actually come about.
Victoria Scholar, interactive investor, many thanks for being with us today.